Okay, big consumer price number out today. Everybody's looking at it. All eyes on the Fed later on this afternoon. Unchanged in May. Up, though, 3.3% from a year ago. Again, I always like to talk about how they used to measure inflation much different than the way that they're measuring it today. A lot of people all excited about this number. This is the first time since 2022. It hasn't gone up over the course of a month. But it's not going down either. I've explained to you the narrative that will change. It's changing right now. You're seeing it across the board, various different publications, this desire out there to sell the American public that, hey, it might not be so bad to have, 3-4% inflation moving forward. Back in the day, that's the way it used to be. It'll be okay. Everybody's got to kind of get used to it. Not so bad. Okay. Whatever. That's what they're going to try to sell. And again, the setup right now, without a doubt, I have no doubt in my mind, is to allow for rate cuts in September, maybe October. Then, after the election, I think they're going to have to do it. It would be in November. So I see, this coming down the pike a mile away. Again, this is important for Joe Biden, for him to come out and basically, James Carville, look at how great the economy is. We tackled inflation and rates are coming down. Bidenomics is working. And who knows? Who knows who's going to actually buy into that? So far, it hasn't worked. But again, that's going to be the narrative moving forward. Now, I want to talk a little bit about inflation and our country as a whole and the debt spiral that we're in. The inflation we're dealing with right now, quite frankly, is simply due to government spending and the size of government and how much we continue to spend. Now, there's a thing out there, and I actually got this question. Doesn't anybody benefit from inflation? And actually, yeah. I'm going to tell you who benefits from inflation. People who are in debt. Debtor nations like our own. And you say, how could that be? Well, when you're in debt like the United States is, you have to pay back this money. If you have inflation, the value of the currency that you're paying it back with is actually depreciating. So essentially you are paying back a debt with something that's worth less. That's the price of money. We talk about it all the time. But you're talking about the disconnect that we've seen and how quickly the Federal Reserve has raised rates in a short period of time, the type of inflation that we've been dealing with. Our country benefits, our nation benefits from inflation because they're paying back our national debt with something that is worth less. Overall, how does it affect you and I? Again, people who are prudent, people that are trying to do the right thing, not so much. Not so much. Again, it keeps us on that perpetual hamster wheel or treadmill, whatever you want to call it, running to stand still. The harder you work, you keep working, the prices of everything continue to go up, and you can't keep up. That's been the overall mood of the country for an extended period of time. I don't know. I said, who knows? Okay. How the narrative will shift, how it will be sold. They've been trying for a period of time. Hopefully Americans will be a little bit smarter this time around. WatchDog on WallStreet.com.